Hello and welcome to another update video about Solana. Let's start here on the 4-hour chart just to give you an idea of the bigger picture for anybody who's new on the channel. The idea is still that we are in a potential 5-wave move to the upside, so we have a generally bullish outlook on Solana. We're just waiting for signals that this larger degree 4th wave is potentially complete, that we have been tracking for a while now. Obviously, the market, I think it was last couple of weeks, it gave us clarity that the 4th wave is already unfolding. Before that, it was also possible, basically very unclear probabilities we had there, that the 3rd wave, which it's clear now that it topped end of December, that this was still unfolding. So it was a bit of 50-50. We were waiting for a breakout. The breakout to the downside occurred. The support area here is already has already been communicated a month ago. So you could look for the price get to it, and for reactions, the market reacted to it already. So we're going to take a look at that now on the smaller time frame. But overall, we are watching for a 5-wave move up like this. So one more high is expected. I'd like to see it get to around about $190, maybe even higher. Okay. Now, obviously, it could be that this 4th wave is already over, but I need to see more evidence to confirm that. At the moment, it's absolutely possible that the 4th wave to the downside is extending a little more. The support area ranges down to $47, even though that would be quite a deep wave for. But sort of 59 would be ideal. Yeah. Now, the market doesn't always do what's ideal. So, that's why we have a range to account for the uncertainty in the markets. And that range was already touched. So now we go to the 1-hour chart. Take a look at the micro count. And now, the purpose of the micro counting is to get an idea of when the dynamics in the chart picture are changing. So far, for me, the dynamics haven't really changed significantly, but there is something I'm observing closely. So we want to take a look at that now. The market already pulled back from this high and dipped into our support area. So that was a success from an analysis point of view, because these are typically the areas where investors, traders, if they want to, can look for finding entries. Yeah, if that means you're putting a limit order there, if it means you're observing the chart very closely. But whenever one of these levels is reached, you typically watch for a reaction. Now, that doesn't always happen, but typically at one of these, we would expect reactions, and the market reacted nicely to that first $80 level. It was the 23.6 Fibonacci level at $79. $80 was another Fib level, and $80.04 or something. So we had a confluence of Fibonacci levels that was communicated. Typically, when we have that, it can provide strong support. We had a significant bounce into resistance. So nothing happened. We've just seen a bounce from our support area, as you would expect it, into resistance, as you would expect it. So no change. And the structure can still be, as per the yellow micro count, wave A, wave B, and then the C wave down in an ending diagonal, wave 1, wave 2, wave 3, wave 4, maxed out resistance. So we are watching that very closely now, and then a wave 5 to the downside. If another low happens in the yellow count in wave C, then I would be looking for the area between $74 and $68 for a potential target. So that's the yellow count. You could call that the short-term bearish wave count. How would that be confirmed? Now we are in resistance, and it would be confirmed, in my opinion, with a break below $83.16. Because this would make the white count, which is the short-term bullish scenario, far less likely. Okay, so we are now in resistance. Again, the market has reacted perfectly here to the 61.8 retracement level, but it's not coming down impulsively. So we want to keep the door open for higher prices after the price reacted to support here. We see a reaction to resistance, but not a substantial one. So we need to consider that it could break out. And it's important to understand, what do we need to see to keep the yellow count alive? And to keep the yellow count alive, we need to see a break below $83.16, which is the support for the white count, which is the short-term bullish scenario, as well as the price should stay below the descending trend line. Now, it's very noteworthy that a break above the descending trend line will not invalidate the yellow count, but will make it very unlikely. The yellow count will only be invalidated with a break above $103.50, which is the wave 2 high that was formed on the 18th of January. But that's the invalidation point. We typically want to have a warning before that. So obviously I made you aware yesterday that I'm already tracking 5 waves to the upside, and that as long as we stay in resistance, I'm also watching for a pullback that could happen in the white count in an ABC structure. So that's what I'm following right now. It could be a wave 2 pullback. That's my best reading of the microstructure here. Surely other interpretations are possible, but my best view is that as long as the $83.16 level is holding, and I have to use that support because we have potentially 5 waves up, as long as that level is holding, a third wave to the upside could unfold. And if that third wave unfolds, it could take us above that $103.50 level. So that's the next step to look at, okay, to watch. Ultimately, we need these 5 waves filled in to really confirm that the wave 4 has bottomed. If we don't see an impulse, similar story to Bitcoin, it's going to be difficult. This is a first impulse, but it formed below resistance, so it's not clear. What we also see here on the chart is a potential inverse head and shoulders pattern. Left shoulder, head, right shoulder could be our wave 2. And if that happens, it could be a breakout. So again, I made you aware of it, act on it if you like to, but these are some parameters to watch with a breakout point above the descending trend line, as well as the $93.45 level. So basically what that means, above 93.45, the white bullish count will increase in likelihood. It's not full confirmation that the wave 4 is bottomed, but we're on the right track then. It takes a break above 103.50 next to confirm further that the wave 4 has bottomed. But please note that as long as we only see 3 waves up, even in this white count, it could just be a larger ABC. Okay, this correction can turn into a larger correction. So that's what I mean, what I highlighted many times already weeks and months ago, when we were moving up in this third wave here, that this was where the easy money could be made on the Solana chart. And I warned you that it will not get easier. It will not get easier because we are in an overall larger diagonal pattern. I mentioned that the wave 4 will be frustrating, and it surely is. And I mentioned that the wave 5 is always difficult. Any wave 5 is always more difficult than the third wave. So the easy money was made in the third wave. Don't think it will get that easy again. Yeah, that's fact. Okay, so I think we see that in the chart. So okay, so that's my update about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.